Welcome to the August edition of the Freight Loop by Drewry. I am Simon Heaney, Drewry's Senior Manager of Container Research and editor of our flagship Container Forecaster report. For today's briefing, I will dip into the latest quarterly report to analyze carrier profitability, where it was and where it is heading. Well, it's hardly a story of rags to riches and back again, but it is fair to say that container shipping lines have departed from El Dorado and are sailing towards much choppier waters. Since the peak earnings of 2Q22, when the industry's profit margin topped out at an eye-watering 55%, lines have been travelling away from the mythical city of gold. This trend was reconfirmed by carriers' first quarter 23 financials, which delivered an estimated industry EBIT margin of around 20%, following performances of 35% in 4Q22 and 51% in 3Q22. Drewry estimates that carriers made a collective profit of around $17 billion in the first quarter of this year, which is still a level of profitability far in excess of anything seen before the pandemic. But there is no cheer because the direction of travel is obvious to everyone. Lines know these results are the last embers of container shipping's red-hot supercycle. Drewry has broadly maintained its industry EBIT outlook for this year at $15 billion, which assumes that gains made in the first half will not be completely eaten up by losses in the second half. We are, however, more pessimistic for carriers' prospects in 2024, following a significant downgrade to the freight rate outlook. We now think that global average rates, that is to say spot and contract combined, will slide by 1/3 next year, following on from an anticipated crash of 61% this year. Weak demand, overcapacity and predatory pricing by some carriers is the rationale behind our expectation for lower rates. As such, Drewry has lowered its 2024 profitability forecast to $20 billion losses at the EBIT level, down from the minus $10 billion predicted in the March edition of the Container Forecaster. Even allowing for the leaner years that we're predicting, there is no immediate bankruptcy risk to carriers today. Cash reserves are still plentiful, but that mountain of cash will soon look more like a hill, especially if carriers do not tackle the overcapacity problem they are facing, and if they want to continue pursuing strategic acquisitions as well as upgrading assets to meet their decarbonization targets. To find out more about the Container Forecaster and our various other container-related services, please visit our website or email us at enquiries@drewry.co.uk. Thank you for your time, and we hope you will join us next month for the next edition of the Freight Loop.